Alejandro, you can go ahead and get started.
Perfect. Good afternoon and welcome to our first event of our series, Crime and Money Laundering, Understanding the Good, the Bad, and the Ugly, organized by the Georgetown Americas Institute and Transcrime in Italy. Also, let me thank Roberto de Michele for the initiative to having this series and for his efforts for putting these three seminars together. So this is a series of three seminars. Today we have our first event, and we're honored to have Elisa de Anda, the president of FATF, with us. Her talk on crime and money laundering, FATF standards and recent trends to identify licit and illicit activities will be moderated by Roberto de Michele. As you know, money laundering and cross-border illicit financial flows pose significant challenges to the global economy and governance. The IMF estimates that up to 37% of international financial transactions may be linked to illicit activities, underscoring the critical need for an in-depth understanding of these complex crimes. That's why we at the Georgetown Americas Institute and Transcrime, Università, Cattolica del Sacro, Cuore are pleased to host this series of three events. So many of you already know Elisa de Anda Madrazo. She's from Mexico. She recently began in July 1st, 2024, her two-year term as president of the Financial Action Task Force. She joined the Ministry of Finance of Mexico in 2015. During her time, she worked as senior advisor for two finance ministers, and she also served in the Financial Intelligence Unit. She had important roles at the Mexican Embassy in Washington, also working on these issues. And she has a very long and distinguished career in the anti-money laundering field. She has been a member of the steering group and chaired the contact group on Malaysia membership process to FATF. She co-chaired the global network and coordination group, which oversees the collaboration with and within the 9 FATF-style regional bodies. And the talk will be moderated by Roberto de Michele, who's the former head of the Institutional Capacity Division at the IDB. He has a very, very long career working on anti-corruption and anti-money laundering issues, both at the IDB and in Argentina. In Argentina, he was the director of the anti-corruption office. He has published several books on issues that go from codes of ethics in companies to the use of information for integrity of the financial sector, reflections from a project against money laundering in Guatemala. So I think we couldn't ask for a better panel today. Elisa will make her presentation, then we will have some questions from Roberto, and then we will open it up to your questions. You can start sending your questions using the Q&A function, and Roberto will come to them after his dialogue with Elisa. So with that, I turn the microphone to you, Roberto. And again, thank you, Elisa, for making the time to join us. And thank you, Roberto, for moderating the session and also for your efforts for putting these three series of Zoom seminars together. And let me thank Michele Riccardi from Transcrime, with whom we are co-sponsoring these events. So the next two events will take place next Tuesday and then the following Tuesday at the same time. Next Tuesday, we will have Michele Riccardi, who is the Deputy Director at Transcrime. And the following Tuesday, we will have Joras Verwerda, who's an associate professor at the Utrecht University School of Economics in the Netherlands. So with that, Roberto, please go ahead.
Thank you, Alejandro. And I also thank Elisa. We know your time is precious, and also congratulations on your appointment. If I'm not mistaken, this century, you're the first woman to be president of the FATF. So also congratulations for that. Let's start this conversation by asking, for those who are new to the field, what is the FATF and what's your job? What do you do?
Thank you, Roberto. Let me please thank you and Alejandro for the invitation, and also to the American Institute at Georgetown and Transcrime at Università Cattolica del Sacro. It is my pleasure to be here. One of my main responsibilities is to be the spokesperson of the FATF, and the FATF has a commitment to engage with all public sector and also private sector, and academia is a very relevant part of it. So it is my pleasure and my honor to join you today. Let me give you a brief summary of what the FATF does. So for those in the audience that might not be as acquainted with this international body, it is, and I say body because it's not an international organization in terms of a treaty-based, which is important and interesting from an academic perspective, yet it is a global body. And I say truly global because we have over 200 jurisdictions. So jurisdictions is more than just countries. 200 jurisdictions that have committed to the FATF standards. So that's the first thing that we do. We set the standards, which is basically the playing field for all countries to have the same rules and the same tools to fight what is a global threat, international, transnational financial crime. So that's the first thing, we set the standards. Those standards then are implemented by the jurisdictions by laws, regulations, norms, the whole institutional and legal framework. So there's a cascade effect by which the standards of the FATF become hard law within those jurisdictions. The second thing that we do is that we assess the compliance of the countries. So all countries that have committed to the standard, again, in some occasions, obviously not the jurisdictions, because, for example, the European Commission, the European Union, it's one of the jurisdictions. The GCC is another one, and we assess the countries individually. But the countries in itself get assessed by peer review. This is by experts. It's very important. It's not international bureaucrats that are coming and telling them how their work should be done. These are technical experts from other countries that are in their own jurisdictions, doing the investigations, doing the prosecutions, gathering the information, regulating the activities that go into another country for a peer review. And this review is very extensive. I want to emphasize that. The whole process takes almost 2 years from the time the assessment team gets into place, the country starts preparing. We have an on-site that is usually 3 weeks on-site with meetings every day, all day. And then we have a whole desk review of the jurisdiction. That report is analyzed by the body, depending, and I'll get into details of that, of the global network of the FATF. And we determine what's the level of compliance of the jurisdiction and what needs to be done for it to be stronger, where it should be. The third thing that we do is, if we identify that there are major shortcomings, that there are structural deficiencies, we identify that country publicly. That is what it's commonly known as the FATF listing, or the gray listing and blacklisting. And this means that there is a public recognition by the FATF that the country has deficiencies to a level of concern. And that what it means is that if you're in the gray list, it means that the country is cooperating and wants to get better, and it's a very collaborative approach. But there is a strong commitment by the countries because it has a lot of consequences being in that list. From a transaction perspective, cost of the transactions, investment. So the incentives are aligned for the FATF to support the country, for the country to commit to the process, and for it to go quickly. So it's not a punitive process. It is a collaborative one, yet one that has strong teeth and that brings change quite quickly, I would say. And then there's the blacklist, which means there are strong deficiencies and structural deficiencies, but the country is not engaged, or we don't get the members to not get the sense that the country is committed to progressing. So we call them not collaborative or non-cooperative jurisdictions, and there's at the moment only 3 of those. I ask you just to take a moment to explain this global network of the FATF and how do we work, because I mentioned 200 jurisdictions. But maybe some of you know that the FATF only has 40 members. So the question is, where are the other jurisdictions? And the response is that there's 9 regional bodies, one for Latin America, GAFILAT, one for the Caribbean, FATF. We have one in Europe, Monival. There's 3 in Africa, Middle East, MENA-FATF, EAG, Eurasia, APG, Asia Pacific. So altogether, we have 9 bodies plus the FATF, which means we're 10 bodies that are doing that work. And the only difference between the FATF and those regional bodies is that at the FATF is where we set the standards. But when we assess, it is the regional bodies that assess. And if there are strong deficiencies to get to a listing, then it goes back to the FATF and we work with that regional body. So I think that would sum up to your audience the 3 things that we do in the FATF: set the standards, assess, and help those countries and push those countries to be stronger. And in my role, I have many responsibilities, but some of them are being the spokesperson, as I mentioned. I get to chair all the plenary sessions and all our decision-making meetings. We get together 3 times a year, experts from the whole world. I get to engage with the heads of those regional bodies, with international organizations that are partners and observers, such as the IDB, the IMF, World Bank, UN, Interpol, Europol. There's a vast list of them, around 20. And overall, make sure that the FATF has a strong relation with the global network and with partner organizations to guide the important work that we have in our mandate, which is money laundering, combating and preventing it, terrorist financing, preventing and combating, and also proliferation of weapons of mass destruction. So preventing and combating any financing of those weapons. So thank you for that initial question.
You're welcome. Now, let's cut to the chase and you know, the underlying question that we had in organizing this series of events is how can we make sure that we are able to make a distinction between licit and illicit flows and financial flows? And so the first question goes, how do we work with the banking sector? Because one of the assumptions is that all of this rests in the shoulders of the banking sector. Is this correct? We're asking too much from them? Sometimes people get frustrated that, oh, there's this news in the front page of a newspaper. Why didn't the bank know that this was a politically exposed person? Is this fair? Is there something else out there? Do we charge too much to the banks or too little?
So I think the response, to put it in a nutshell, is that fighting financial crime is not a one-player game. So while banks do play an important role and they are at the front line of defense of combating these illicit transactions, they're only one piece of a big puzzle that is much more complex. So let me explain to those joining us today what I mean by that. The first thing is to divide and to understand that the private sector, that is, again, at the front line of this fight, we can divide it or simplify it in 2 big sectors, the financial one and the non-financial. Within the financial sector, banks are a very important one, and understandably, we think of them as probably the only player, because banks have been in existence for over 1 millennium, right? The first bank was in Venice at the beginning of the 1000s. However, the architecture of the financial system is much more than banks. So think, for example, of currency exchange businesses. Think of insurance companies. Think of security firms, investment intermediaries. All of those non-traditional players also have a role to play and can be exposed to being used for money laundering. So it's not only the banks, it's the whole financial sector. But importantly, that sector, it's not only the traditional players. We have new players. We have the fintechs, which are something new in the last 2 decades, mostly in the last decade. So think about the use of blockchain technologies, think about crowdfunding, all the sandbox models that have been brought up to life. This increases the challenge within the financial, if we include those fintechs within the financial sector. Because it's not only about new players, so that adds diversity to the system and the number of players increases, but also it brings fragmentation for the financial transactions. So before, you would have to go from one bank to another bank. And right now, you can have an intermediary within those banks, for example, to conduct a cross-border payment using, for example, virtual assets. That's something that we're seeing within the back office of the financial institution. It can be on the onboarding process. You can have a fintech that is doing the digital onboarding of a customer, and then there's a bank involved, but there's the other fintechs in the middle, and then another bank or another financial institution at the end of the transaction. So that means that one financial transaction can have many components through the transaction. And that means fragmentation of the information, but also it means that that information is within different jurisdictions. And that is a challenge because of data protection and privacy. Because if you are, let's think, an authority, and you're looking into a chain of financial payments, and the moment the money flows out of your jurisdiction, you cannot follow that. And then if that transaction went to 3 or 4 countries, then, I mean, it's very clear for the audience how we cannot simplify it only on the banks. And to add to that complexity, let's recall that not only financial institutions are used for money laundering and are obliged entities to report to authorities transactions and to do their part, but also the non-financial sector. There are what we call, and it's a very technical, we call them the DNFPPs. We love acronyms at the AML world, which is non-financial designated non-financial business and professions. And these are lawyers and accountants, for example, notaries, real estate agents, casinos, dealers of high-value goods, for example, jewelry, art, luxury cars. In some countries, for example, you also have the movement of cash, the companies that move cash from one place to another, from, for example, a store to the bank or to another entity within the jurisdiction. It's also considered those cash transporters a designated or obliged entity. So all of those are what we call also the gatekeepers. And if you don't have everyone playing together, everyone following the rules, it's very hard for the authority to actually do their job. So to go back to your question, is it a bank problem? No, it's not a one-player problem. It's a team sport. And we need every player in the team to play if we want to get this right.
Let's go further in that area, because another reason for skepticism is how effective is this whole framework. When you look at the numbers of suspicious transaction reports produced by average jurisdictions, and the number of cases that are effectively brought to the judicial system, prosecution, and eventually some kind of decision, say somebody gets put in jail or whatever, the gap is really significant. Not only in our region, in Latin America, in Europe as well. Are we also putting too much faith in the individual ROS? Should we be thinking about a different purpose of the reporting mechanism? Is there a role for the financial intelligence units to produce something in addition to a single report to the enforcement agencies?
Okay, so let me take one step back and explain to the audience what are you referring by ROS and STRs and CTRs and all of these reports that you're mentioning. So if I can reframe your question is the number of investigations that we're seeing enough compared to the number of reports that the authorities are receiving? And if I may, let me explain a little bit more to the audience how this information is obtained and preserved by the authorities and how it's exploited to respond to your question. So within the system to prevent and to combat these illicit crimes, these financial illicit crimes, we have many parts of the chain. So it's a system, it's an ecosystem. All of these authorities existed before we started preventing these crimes. So think of a regulator, a supervisor, a law enforcement agent. All of those authorities existed before. What didn't exist before we started this fight against financial crime, and certainly not before the FATF, because it's a creation of the FATF standards, are the FIUs, the Financial Intelligence Units. So no country in the world had a financial intelligence unit until we started to fight money laundering, and then terrorist financing. That's how this institution was created. And actually, it was the FATF that recognized that some countries were having a database that was very useful, that it was a best practice and other countries should have it. And so we created a standard that required countries to have this database and to do things with it, which is the Financial Intelligence Unit. So it is, I would say, a creation, or not a creation, but the fact that all countries have now a financial intelligence unit is because it's part of the FATF standard. So it shows the importance of having, as I said, this level playing field internationally, so we have equal tools, or at least compatible tools, to fight what is an international problem. So those FIUs, what they do, and certainly in Latin America, they're very relevant and increasingly known. Think of Mexico. Maybe 10 years ago, nobody knew what an FIU was. When I interviewed first at the FIU to work in the Mexican FIU, and I told my parents I was interviewing at the WIF in Spanish, they didn't know what the WIF was. And certainly most of my family members didn't either, or friends. Nowadays, the FIU, it's very known in Mexico, and it's the same in most countries of Latin America. So it's certainly a new institution in terms of this century or the last 15 years, and it's certainly one that it's getting more attention. And the reason why it's getting more attention is because it's proven to be very relevant to fight financial crimes. Part of what they do is to manage a wide range of information that is reported by the private sector and other reports that you're mentioning. So we have suspicious transactions report, commonly known as STRs. We have currency transactions reports, the CTRs, and all of that information is received by the FIU, and then it can use that information to conduct analysis. So the main objective of the FIU, without being the only, is to centralize a database of information, wire transfer data, information from public-private partnerships where there exist, international exchange, and all of that in a way provide a tool for the country to determine if there are patterns or alerts that should be notified to the law enforcement. Why is it so successful? First, because it's a very robust database for the authority that has proven to be, as I said, very useful. But secondly, because those FIUs got to be organized in what it's called the Egmont Group. So the FIUs directly are part of an Egmont Group that developed a system to exchange information, to have international cooperation between them. And this system is much more efficient, effective, quick, accessible than traditional international cooperation. So for those that are not very close to the work of law enforcement, you have to know that on average, asking for evidence from another country takes between 6 months and 18 months. Of course, there are exceptions, but usually foreign affairs is involved, the embassies are involved. There's huge and whole and difficult channels to obtain information from another country. Whereas the Egmont Group can exchange information in real time. And the FIUs are working on it 7 days a week, 24 hours a day. So the Egmont Group has facilitated the way in which the FIUs can exchange this information. And just to give you an idea, in 2023, the Egmont Group, together, all the FIUs in the Egmont Group, received over 600 million reports. This is an astonishing volume that potentially can be accessible by all FIUs through the Egmont Group. So rightly so, with this information, with the use of AI, modernization tools, technology, and also obviously the human element, in addition to public-private partnerships, we have seen the potential of the FIUs. So going back to your question, is the number of reports, it's too big for the low number of investigations that I see? I think the response is that's an unfair question, because the FIU wants to receive as much information as possible, and not necessarily all of that information means there is something wrong. Many of these reports are because they're over a threshold, and just as authority, you determine that you want to receive that information. Many of those reports have nothing to do with an illicit activity, yet the authority sees benefits from gathering more and more of that information. So I don't see that the number of reports should have as a correlation a number of investigation. That said, the number of investigations in general, but in Latin America in particular for money laundering is quite low if you compare it to the amount of crime that produces illicit proceeds. But I don't think the response is we have to ask the FIU to necessarily do something, because I think the FIUs in general terms are working very well. I think we need to focus the attention on the law enforcement. And there's a temptation to ask a lot from the FIU because they're proven to be so good that we're asking them to do more and more and more and more. But the reality is you cannot ask something to be a hammer if it was made to be a compass. And I think the FIU is made to be a compass, and we're asking them to be a hammer. And that's the work of the law enforcement. And to solve the big challenges that the law enforcement have, I think there's bigger places to put attention. International cooperation from law enforcement, so traditional international cooperation, which is the evidence that can be used in trial, because let's remember that the FIU produces and has intelligence, doesn't have investigation. So the information that the FIU has is financial intelligence, which means that in itself cannot be directly used as evidence in a case, in a prosecution, in a judicialization of a case. It needs to go through a formal procedure to gather that as evidence, and that has to be conducted by the law enforcement because it has much more due process, obviously, controls. So my view is that if we want to fix the issue, we need to focus more on the law enforcement. Why they're not investigating the disseminations that they receive by the FIU, why we're not getting to convictions. Many cases start, but they don't get to a conviction. Why are we not recovering those assets that in many cases are identified? And in particular, the international cooperation. For me, that's a big bottleneck of the system. And that would be the way I see it with regards to the FIU.
I have another unfair question using your term. Most of these financial intelligence units started 25 years ago or so, closer to ministries of justice, but then they moved to the financial supervisor, financial sector, or the finance ministries. How do you see this process? And is there any evidence in terms of the institutional design that is connected to the effectiveness of the FIU?
That's a good question. So when the FATF sets standards, we have to be very mindful that we're setting standards, as I said, to a very diverse number of jurisdictions. And that means diversity of legal systems, institutions, administrations. So we have to be very clear in the expectations, but not very prescriptive in the way to achieve it. So we let that to the sovereign countries to decide. When the FATF decided to have a recommendation that required countries to have an FIU, the FATF said that it was quite open for the country to decide which was the nature of that FIU. So you're right on point. We have different models globally of FIUs, and then that allows you to compare one to the other. The one that is most used is the administrative FIU, which means it is, as you say, usually in the Ministry of Finance, and it doesn't have a law enforcement power. Then we have the FIUs, judicial FIUs, which have, in many occasions, and most of them, law enforcement powers, and that are sitting with the Justice Department or the prosecutor, depending on how you name it. In Latin America, La Fiscalía, for example. And then there are mixed models that incorporate both of the natures. The one that it's more used is the administrative. I wouldn't feel comfortable as FATF president to tell you this model is better than the other. We recognize that they have advantages and disadvantages. I will say that there is a strong argument that the information that the FIU has is very close to the financial sector. and that there has to be a lot of trust into that authority, keeping that information, making sure it's safe, it's secure, you know, from the general public, from the use of the authorities for purposes that are not meant to be what it was created for. So, for example, political use or adversary use, or against civil society. So there's a lot of angles of why you need to make sure that FIU it's autonomous, independent, and I think that's what would be more important from my view. Less on which authority it is, but more that it's independent, it's autonomous, it has the secure measures for the confidentiality and the protection of that information. Provided that FIU works well with the law enforcement, you will have good results. And that doesn't necessarily mean they have to be sitting within the same ministry or the same office. It's more of an institutional connection and oiling that relation and trusting that relation for it to operate rightly.
Thank you. And reminds me, recently I was working in a country trying to make sure that there was a good connection between the revenue agency, customs, the attorney general, and the FIU. And I do remember something that you just mentioned. They looked at the FIU as the new kid on the block. You know, some of these agencies have been there for decades, and then all of a sudden this entity comes up and everyone is asking, can I trust you or not? So I think you're totally right that the way in which they exercise their function is critical: independence and the autonomy, and of course the confidentiality by which they manage their affairs. Let's move a little bit to the bad and the ugly in our region. What have you seen as tendencies in the last decade in terms of financial crime in Latin America and the Caribbean? What have you seen in the past, and what are you seeing towards the future? How has this landscape sort of evolved? Because by definition, criminals have a dynamic enterprise and they're constantly changing. What has happened? Where are we going?
So I would say that unfortunately, we see a lot of what we saw decades ago. So you would think that the crimes would have been suppressed. For example, drug trafficking. The FATF was created in '89 precisely to fight drug trafficking in the region of Latin America. So it was created as a task force to fight the money laundering precisely of this crime in the Caribbean and in Latin America. And while we have evolved, a lot of these crimes are still very topical nowadays. So a lot of what we see are things that we did see a couple of decades ago. However, there's two tendencies and two new changes that I would like to highlight to your audience. The first one is the element of the cyber crime or cyber-enabled crime. So of course, this has to do with new technologies. It was exacerbated by COVID and the fact that technology exploded and many new generations got to use technology. And by new generations, I don't mean our kids or teenagers, I mean also the elderly. So a generation that is probably not as educated into the risks of new technology got to start to using it. So for example, we see that a lot of the elderly are being subject of crimes online, either fraud or other types of crimes, but they are a very vulnerable population. And the same with minors. In terms of online exploitation, it's very concerning. And just to give you an idea, and this is globally, not only in Latin America, but the estimate of minors that are sexually exploited online every year, it's 300 million minors. When I saw this data, I thought it was a mistake. Sometimes you get reports from briefings and the numbers don't match. But unfortunately, it is indeed 300 million minors every year get to be exploited online. That's more than twice the size of my country, Mexico. And as a mother and just as any human being, it's just extremely concerning to see that our minors through the internet are being subject to a type of crime that they were not exposed to decades ago. And that obviously, in terms of fraud, is extremely exacerbated in terms of numbers. So it feels like a wave, that it's growing and growing and growing. And I haven't get the feeling that as authorities, we're up to the task and growing as strong as that wave is growing. So some people put it in terms of the metaphor of the tanks. When you're in a war, the tanks take a lot of time to move. And it kind of feels like that. Law enforcement and the authorities are still with a very traditional conception of security. So security as something physical, that it's on the street. So they steal your wallet, they steal your money, they kidnap you, or they abuse you physically. But now it's changing completely into the cyberspace, and that requires a different type of prevention and criminalization of that crime by the authorities, and one that requires a lot of capabilities, a lot of training, and it's not, unfortunately, the case that we're seeing the countries getting to match that that threat. So that's one big alert, I would say, and specifically also in Latin America. The other one is that we're seeing a diversification in the activities of the criminals. And by this, I don't mean the traditional conception that we have where a criminal that used to traffic drugs, now it's trafficking migrants and also other kind of piracy and other kind of goods. I mean that within the chain of the crime, there's a diversification of the activities within the criminal network. So think of, for example, territorial control. And by this, I don't mean that the government doesn't have authority in that territory, but territorial control for the criminals is that they can manage goods passing through it because they have the corrupted authorities, or they have people watching if the police comes. So they can manage the movement of illicit goods through a certain territory or a certain border. And now you see crimes that's what they do. They're very good at it, getting that control, and then they basically tax other criminals for doing that activity within that territory. Think of the drug dealers. Before it was the same cartel that would do the whole thing, and now you have criminals that come to you and offer you as a criminal drug dealer to develop a market. So they'll offer you clients. They'll basically say, we're creating clients in this school, in this area, in this region. And so they pay others to get hooked into, like, basically become clients of the dealer. And they're experts on doing that, on hiring people that are likable, friendly, usually young people within friends and colleges or schools that will create you a market. And the same goes for money laundering. You have criminal networks that now are specialized in laundering money, and they'll launder money for the corrupt, they'll launder money for the drug dealer, they'll launder money for that person conducting kidnapping or whoever hires them. And that poses a major challenge because it means that diversification and segmentation of the crime, they become very good at it. They are specialized in specifically that part of the chain. And they have a lot of resources because it's very lucrative to conduct crimes. That's why most of the crimes are conducted for economic incentive, and therefore the authority has more limited resources in many cases than the criminals. So that's a big challenge. So there's many of them, but just to highlight those two. And I think in Latin America, the illicit flows, it's particularly relevant as a developing countries region, because these millions, hundreds of millions of dollars could be part of the tax revenue for the country, that could be sustaining growth, could be creating jobs, could be helping alleviating poverty, could help with inequality mitigation, climate change initiatives. So it's really unfortunate, and you know this better than I, Roberto, from your time at the IDB. I think from the last report I read from the IDB from 2022, I think the estimate was that in Latin America, the estimate of these proceeds reached 3.4 of the GDP. That's massive. I mean, for Alejandro as an economist, 3.4 of the GDP of the region, that could be going to much needed policies. It's just huge. And a lot of it is tax evasion, a lot of it is corruption. public procurement. So it's not only about the indirect cost of the crimes, which has a huge human element, and I think that the example that I mentioned about minors online, it's a perfect example of it. But also from the economic perspective, the macro perspective of money laundering, it's something that it's very relevant for Latin America.
Thank you. And Elisa, I think this may be a good opportunity to bring a question from the audience that is related to what you just said. There's, of course, a very difficult challenge, particularly in our region, with many countries having a significant informal economy. What is the trade-off that you see in creating rules that are effective in preventing the bad and the ugly from taking the economy, but at the same time, not hurting financial inclusion and allowing the people who rely, for example, on remittances or with all due respect, the weaker financial channels, or how we make sure that while we are trying to deploy all of these measures against the bad and the ugly, we don't hurt the good, that are the small people who require access to finance.
Thank you. I think that's an excellent question. And as a Mexican that has a lot of fellow Mexicans in the U.S. that support their families and the Mexican economy through remittances, as someone that has worked in the U.S. and seen the struggle of migrants to get access to the system in the U.S., and also the high level of refugees that we see nowadays in many countries, that it's difficult for them to open an account and such. I have not only from the FATF, but I have a personal commitment to financial inclusion and to making sure that we strike the right balance. I think the short answer to your question is we shouldn't see them as opposed. So for us that we are into the business of fighting a financial crime, having financial inclusion, it's a must. It's not an option. It's not a good to have. It's a must. Because to the extent that we have informal economies, that we have an unregulated sector, that's where the criminals also hide. So you have a bigger market where the criminals and the terrorists can hide. So the worst scenario for authorities, and I say authorities because at the FATF, as I mentioned, we're a task force. So all of us, including the president and vice president, we're public servants and experts on the field. For us, the worst scenario is to push the actors and everyone into the informal sector, because then it becomes a bigger and darker area where we can find the criminals. So it's in our interest from a financial crime perspective to include everyone in the system. That's the short answer. So it's we need to make sure we close the door to criminals, but that we leave it open for those remittances and for those people that want to invest, want to get access to a credit, eventually be a credit for a mortgage or for other type of financial life in the future. That's the first point. The second point is the FATF, everything at the regulation of the FATF, the core of it, the columna vertebral, as we would say in Spanish, the spine of it, what holds everything together, it's the risk-based approach. And we recognize this and give the authorities the opportunity to have simplified due diligence measures when the products and services are assessed low risk. So, for example, in many countries, there's the tier accounts where you have products and services that have limited transactability, you have some limitations, but they are created and thinking of a specific type of customers or clients that by limiting the risk, you can have more access without, for example, a simplified due diligence or something of that sort. So the FATF recognizes this and has been working very strongly, including currently in updating our standards to make sure that this message is clear. And not only that the FATF provides this opportunity, but that we encourage countries to look into these simplified due diligence measures when there is a low risk assessed. Just as we ask them to have higher standards and higher due diligence And hence, when there is high risk, we want the same when there is low risk. So we work very closely with the financial inclusion sector. I've been working directly with, for example, AFI, the Alliance for Financial Inclusion, with the central banks, with the international payment efforts by the G20 to make the payments more accessible, cheaper. So we bring the transparency and the integrity part of it, but also acknowledging that we don't want to be an undue friction. So it's always about the balance.
Thank you. 3 weeks ago, I think the Financial Times had this very interesting story in the front page of a journalist that managed to uncover the beneficial owners of companies that had bought 25 oil tankers to transport oil from countries that are sanctioned. And for me, it was a beautiful moment because the journalist was able to get beneficial ownership information. So my next question, I confess I'm a big fan of this policy. So my next question is, am I too optimistic here? Or is it true that this is a very important part of the AML-CFT edifice, and we should invest in this to make sure that we can separate companies that are run or owned by the bad and the ugly?
I think you're not too optimistic. I think it's an essential and a very promising tool, and one that is already giving results. So I'm also on your side of the choir into the commitment to beneficial ownership. So let me explain to those joining us what beneficial ownership is, why is it important, and in particular for Latin America. So beneficial ownership, or beneficiario final, as we say in Spanish, or controlador, in some countries they call it that way. It means that you know who is behind a legal structure. So of course we have companies, legal arrangements, in trusts. So we have a lot of, and as a lawyer, I recognize sometimes it can get very difficult because you create layering and a very complex system that it's very hard for the authorities, for the journalists to know who is behind a company. And of course, companies are very important, and we want to promote them. We want to make sure that they can exist and thrive because they create jobs and are fundamental for our economies. But we have seen there's been an extensive abuse or use of these legal arrangements and trusts, precisely to hide illicit proceeds and who is behind, for example, an apartment that is being bought in a luxury area in a country that it's attractive for corrupt officials to go and spend their holidays with their families, or behind a facade company, a shell company. So to give an idea of how important this is, and this is a parenthesis, there was a study by GAFILAT, which is the regional body I mentioned for Latin America. And it's very interesting because what they did is they said, instead of doing estimates, which is very hard because all of this is a black economy and an illegal market, let's look at all the convictions and the cases that have been going to the courts and see those cases that have a money laundering component and see how that money was laundered and for what crime was the proceeds from. So they did a huge study that I want to make sure that, because I get the point across, that because it's a study that is looking in retrospect at cases that have been judicialized, and that takes a long time. It's not a picture of today. It might be a picture that they offer today, but it's with information that went to courts many years ago. But just to give you an idea, the crime that most resources created in those cases that they had was corruption and bribery. So it doesn't mean that it's a crime that is more prevalent. It's the one that was more taken to courts related to money laundering. The second one was environmental crimes. The third one was drug trafficking. So that was the first thing, looking at the crimes that actually were taken to court. And human trafficking, for example, and migrant trafficking only came to 7% of the cases, so very, very low. The second point was, how did those criminals launder their money? Which was they using? The use of legal persons and structures accounted to 49%. So that was the mechanism that they used. And then the use of frontmen, so using someone else to hide behind them, was 33%. So if you put together that 49 and that 13 and that 33, it takes you down in 82 of the cases of money laundering in Latin America that were taken to court. In 82% of those cases, the money was being hidden behind a legal structure or having the beneficial ownership. So I think that's important to give a dimension to the audience of the prevalence of the use of the lack of light on the beneficial ownership, and then how important is the tool that I will be speaking on. So the tool that you're referring to, Roberto, are the registries that the FATF has recently, and by recently I mean in 2022 and 2023, asked all countries to develop on the beneficial ownership of all the companies and trusts that are created or have an address in their country. These registries are mandatory by the FATF or a system that is equally efficient. Or you have to, if you use another system that is not a registry, you have to demonstrate that it's equally efficient. So it's a high burden for a country to choose not to have the registry, but to come up with another system. Yet we do allow it. But most of them are going for the registry for that reason. So that registry has to be public in the sense that it's controlled by the authority. So the authority is responsible to it. It doesn't mean it has to be open to the general public, but we do encourage and allow that for countries. And many of them are choosing for that information to be accessible either to the general public or to those that have a legitimate interest. And by legitimate interest, I'm thinking of journalists, academics, researchers, authorities of another country, etc. So those registries are proven to be very effective, because what it means is that authorities across borders can access updated information very quickly, and that makes it very hard to hide the beneficial ownership. So for that system to work, we need all the pieces of the network to join this effort, because of course we're only as strong as our weakest link. So you can have a public registry that already offered this to the journalist in the case that you refer to. But if there was another country where the first conception of the company was created and that was not part of the registry, that would have been the end of that investigation for a journalist that doesn't have investigation powers that the authority has. So law enforcement investigation powers. So it's very promising because these changes are new, and we're giving countries time to implement these registries, and we're going to be assessing them in the FATF in the incoming years. And by the when I say the incoming years, is because we're starting a new round, which means we're going around the globe and assessing all the countries again. And we're planning to do that within, it sounds like a long time, but it's a massive effort when you think of assessing all these countries in this very comprehensive assessment that I mentioned within the next 6 to 8 years. And that would include the whole global network. So in these 6 to 8 years, countries have the pressure before their assessment, have these registries. And indeed, they're already providing very good tools for authorities and also for the general public. And you saw that also in recent leaks that I don't want to go into the specific ones, but that's the kind of information that will allow, and we're making sure that legal structures are not being used for that opacity.
Let me bring a question related to your response, which is, on the other hand, I think the FATF not only set the standard, but it brought other agreements aligned with the FATF's. For example, the OECD automatic exchange of information for fiscal purposes follows the FATF standards, and therefore they're also looking at whether or not tax evasion or tax crimes are being connected with the lack of proper supervision and functioning of this registry. So I think the FATF did a good job in making sure that at the end of the day, there's one rule on beneficial ownership, and everyone follows that. Another unfair question from me then is, any preference where to put this registry? Should they be in the revenue agency? Should they be in the corporate registry, central bank? I've worked with different models. I must confess that years ago I thought they should be placed with the corporate registries. I'm wrong. I confess I'm wrong. I tend to like when they are within the fiscal authority with taxes, because they have institutional capacity, they have good systems to manage huge amounts of information. They are used to working with confidentiality when needed, but they're also used to sharing information. But that's a very personal opinion. So where do you think this registry should be, or it's just the function that matters?
So, I mean, I'm not saying there's no answer to that, but because the FATF, again, we cannot be as prescriptive, is as president, I say this is a preferred model, then countries might take the signal that the FATF is saying this is the model to take, right? So I have to be very sensitive in these situations, not to give a view that, although could be personal view, could be read as an FATF position. What I will say are two things related to your question. The first one is there's an increasing recognition that the AML tools are useful and essential to fight tax evasion. So more and more we see that the governments recognize that that set of tools is very useful to fight tax evasion, and the other way around. The AML experts recognize that some of the tools to tackle tax evasion and to fight tax crimes are useful for the other agenda. However, I think it's fair to say, maybe the tax experts wouldn't agree with it, but I think it's fair to say that it's more the tax experts that are using the AML than the other way around. So I think the AML system is more comprehensive and has more tools and tentacles and teeth to bite. And that's why maybe your perception of putting them together, or at least close together, can help and be mutually reinforcing. And I think that's a fair argument. And there's a very good study by the IMF that explains on this need or usefulness to build on each other. That said, I think that depending on the country, a good place to have the registry is there where the authority, the one that is in charge of the registry, can make sure that that information is updated, so at least every 6 months. And sometimes that means that they have to have supervisory power over those that have to submit that information, because otherwise you're one step far from it. That can make sure that that information is accessible by the law enforcement, both of the country and international corporations. So it has to be an authority that is connected to the international corporation and has powers for that, which is not always the case. So either by MOUs or connecting to their law enforcement or through the Egmont, if that's the way they choose to communicate. But basically, it needs to be able to exchange information to basically the whole globe of authorities, and that's not something that all authorities would have competence on or the capacity. So you also have to think on that. And the third is to make sure that that information is not compromised. And here I'm thinking more of cybersecurity. So more and more as authorities, when we're creating databases such as the FAU and the public registries, there's a lot of concerns on data protection and privacy that we have to be mindful of. And so it would be the authorities within the country that would be better placed to assess how they can make sure that registry is secure, it's updated, and it's accessible by the authorities. And that would be the right place to have it. And that's probably not the same answer for all the countries.
Thank you. Let me pick a couple of questions before my closing one. So one that comes all the time, but it's a very important and fair question, is digital currencies. Are they a risk? Are they an opportunity to supervise better? Are they by definition a vehicle of an invitation for risk? How does the FATF take into consideration digital currencies?
So first, let's make sure the audience has in mind that there's a distinction between the virtual assets, which are the cryptocurrency or digital currency. There's many names to it. At the FATF, we don't like to use currency because it gives a false perception. So that's what we call them virtual assets. And the blockchain, it's completely different. So I think there's many use, as I think you wanted to hint, Roberto, that the blockchain can be very useful from a rec tech perspective. So allowing the government to do their job and to make a lot of these payments more transparent and safer. That's different than the virtual asset itself. So one is a technology that enables the other. The virtual asset in itself, I think it has opportunities and challenges, right? Just as money has, and other things that we regulate in any system. So it's I wouldn't satanize the virtual assets, and I wouldn't say there's no risk. On the contrary, I think there's a risk, and you have to dimension that risk, and it's very different, the risk that you have depending on the country and depending on the type of transaction you're having. There's some countries in Latin America where you see a high use of virtual assets to keep the purchase power of their salary. So in many countries that the peso is devaluating very quickly, such as in Argentina, that there is instability of the currency. Many people receive their check and they change it to virtual assets because they have more stability in some virtual assets. And here I'm not recommending which one, but some of them have stable component than keeping it in the currency. So in Argentina, if you speak to authorities, they will tell you that virtual assets is a financial inclusion tool and a way for people to have their money that would be different than having gold or other kind of things. Yet they do provide anonymity, because although the blockchain it's public, and many people will say virtual assets are not a black space, you can go in and look at it, and that's true. You can look into the blockchain and see the whole transactions, but what you don't know is who is behind that transaction. So you see the virtual assets moving from one dot to the other, and then there's the mixers, and you change from one virtual asset to the other. The issue is when you don't know who is moving those resources or doing those transactions. So what the FATF did a number of years ago, 2018 and 2019, is that we decided this was a sector that was vulnerable to potentially be used for terrorist financing. And we have seen many recent cases where terrorist attacks have been used or financed by virtual assets and also by money launderers. So that just as cash and other sectors, the governments should regulate the sector or forbid it and make sure that it does not operate within their jurisdiction. So the FATF was the first international body to actually set a standard and regulations in this sector, which was the case for beneficial ownership back in the day. We were the first organization to define the concept and to set a standard of it. So the FATF is at the front line of a lot of these improvements. What we see now is a cascade effect into the countries that are starting or have been starting to implement that regulation. What we're asking countries is to ask for a license or registration of the provider. So you do not regulate the wood, you regulate the people that they transact with it, the providers, what we call the virtual asset service providers. Just as with the money, we don't regulate the money itself, we regulate the institutions and the people that operate with it. So they have to register or get a license. They need to be supervised. They need to present reports to the FIU. So to your point on the FIUs, now FIUs are receiving their reports from these transactions. And they need to report also when they see that there's something that of alert within their system. Otherwise, they can be prosecuted. And you've seen in the US big cases where virtual asset service providers have been subject to sanctions and prosecution of law enforcement precisely for breaching or not complying with these rules. Now, while we wish that this cascade effect of implementing the standard were to be quicker and faster, because it hasn't been at the pace that we would or we think it should be or it needs to be. If you look at the materiality of it and into those countries that have the most clients or are moving the most amount of virtual assets, 82% of the materiality of the virtual assets sits within jurisdictions that are already implementing the standards. So if you look at the number of jurisdictions, it's not as promising because we're not close to the 50% of the market being regulated, supervised, and again, complying with reports. But if you look at it from a materiality perspective, where we see that there's more risk for abuse. Those countries are complying, and we issue a report every year in the month of July on how things are going on this regard. And we will keep supporting and pushing countries to be effective on this new sector.
I have one more question, and then I have an offer for you. So the last question comes from the public too, that we have over 27 questions, and we're going to send all of this to you, and we're going to, Georgetown and Transcrime, we're going to write a brief of the 3 conferences so everyone will see the discussion. But I want to pick one of the questions from the audience is, the listing process. You mentioned at the beginning of our conversation that this has financial, reputational, economic, and eventually political consequences to the jurisdiction that is listed by the FATF. But also, in my experience, in many cases, has been an opportunity that countries have taken to move the agenda forward. What's this kind of more positive way of the listing process? What's your experience, and what would you recommend to a country that is in the middle of an evaluation of taking this as an opportunity for reform?
So having an assessment of the FATF, because it's known how thorough and how exhaustive and strong it is, there's a big incentive of the country of getting ready. So you see that countries usually, before getting the assessment of the FATF, passing policies, laws, regulations that had been in Congress for a while or have not been put forward for the legislative for adoption. You see an increase in investigations in many cases, but that takes time to eventually get to conviction. So probably if they start then, they will be too late. So you have to start early. And certainly when there's a gray list process, all the incentives align, and you see even the heads of state very committed to the process because of the consequences it can have and the incentives that they have to exit the list. Now, as I said, the FATF's purpose is not to be listing countries. The FATF purpose is to have strong countries to fight this global fight. So to the extent that in the next round that we're going to start, we can see less countries being listed, that would be a success. That's that's how we would see success if countries that have been listed do not come back to a listing. And I think the FATF, the advantage is that we provide a very exhaustive list of things that need to be done. So it's not blindsided of what the expectation is for the next test. If you look at your past assessment, you know very well what the expectations and the gaps are for your next assessment. Now, I do expect the FATF to have some sort of a higher bar in areas that we've been asking for a long time. So prosecution, number of asset recovery, these things that have been in the radar and on the request for many years. And there's also going to be sensitivity of the FATF in areas that we're just requesting and that countries are starting to do those changes. Without lowering the bar, but recognizing that countries are in the process of adapting those changes. So depending on the area, I think the approach will be different. But we're very much looking forward to this round. And I think at the beginning you said, like, how are we doing with this fight? I think my main point is what we're fighting, which is financial crime, is massive. And we cannot measure our success or our success of today by the size of that challenge, because that challenge will continue to grow because unfortunately crime pays. I think what we have now, and we have to recognize, is a big success of the FATF. It's a true global response to a global threat, which you don't see in many areas of global challenges. And there's many global challenges, and yet very few areas where you see the whole globe sitting and committed to it. And it's a topic where authorities are committed to it independently of their political views, independently of the aisle where they sit. So even within a jurisdiction, it's bipartisan. And even within the fragmentation that you're seeing internationally in other topics, I think at the FATF, the commitment of the countries is higher than ever, and of the ministers and the global network. So I think it's a big success that countries keep to push the authorities to combat these crimes. there's many success cases. And I would just ask those of you joining us, when they think of the perception of risk of being caught for money laundering 10 or 15 years ago, where you could pay everything with your credit card and no one would ask questions. You could have, in many of our countries, dollars moving from the bank to your hand, paying your credit cards with dollars. Like, there's many restrictions that in the day-to-day basis you think how you have to identify when you open a bank account. And I understand the challenge of financial inclusion, but yet the controls are much higher, and that makes the money laundering more difficult for the criminals, which is what we want to do. So I think it's a success story of international efforts and of countries working hand in hand. That doesn't say that that's not to say that the challenge is not there, and there's no many areas that we have to work on. But there's a commitment to do so, and there's a commitment to do it with all jurisdictions. So we cannot leave anyone behind in this fight, and in particular areas like Africa. If you look at terrorism casualties, half of the casualties of terrorism in 2023 took place in Africa. And Africa, the whole of Africa, is part of the FATF. And the same with money laundering. You have all regions, all countries, independently of the geopolitics, working together, exchanging information and fighting crime together. For me, that's a success story. And I feel very proud to chair an organization with this noble mission and with the commitment of members.
Thank you. And now, Elisa, thanks for your time, your answers, your patience. Now it's a time where you're given the wish list. So you have Georgetown, you have Transcrime here. What does the FATF need from the academic community? What is something that the academic community can do for you?
So there's a couple of things. First, I think the FATF in general, it's an understudied body or institution for many reasons. But I think to the extent that academics and research do work on the FATF, it will push us to be better, either by providing data, and the more data you have, the better policies you can have or measure the impact. Also to push us to be better. I think academia by nature has a critical role to play, and I think that's something that we don't shy away from. So it's not that we want to be in the shadows. We want to be in the spotlight, even if that means that we get actors to push us to be better and question things. So that's an open invitation to engage. I think there's a lot to be said in terms of measuring. If I were to provide an agenda for the academics, for example, I would say there's a lot that can be studied in terms of how exiting the list benefits a country in terms of investment, development, and the notion of the investment that it receives. So think, for example, of it's difficult to mention a country without thinking that I will get into trouble. But think of a country that used to be very shady, that would be considered a financial paradise, as used to be called. And now those countries, many of those countries are the ones that are more transparent, are receiving more clean investment and with a heavy commitment to it. So I think that switch in the time of type of business oriented, a measure of that would be very relevant. The same for countries that didn't have controls for anti-corruption, for anti-money laundering, that now are able to receive more resources from the IMF, the World Bank, IDB, and others, private institutions that offer them credit because they have public procurement measures and a system that makes sure that that money or the investors' money, they know that it will be well used and well taken care of. So measuring that good impact, because there's a lot of studies on how the gray listing affects a country, but there's not a lot of studies of how the new measures enables a country for development or for other agendas. So I think that's a good question from an academic perspective. The second one, and this is probably a wish list for me in the future, international cooperation. I think that's a big bottleneck, the formal international cooperation. So not the one from FIUs. I think the FIUs is a case of success of international cooperation. and one that could be used by academics as a case example of what worked well and what can law enforcement learn from it to implement something similar. Because just the fact, as I said, that we take between 6 months and a year and a half to get evidence for a trial cannot, in nowadays world, it's just very concerning. So there's, I think the Egmont system and the FIU system, it's an interesting case study from an academic perspective, and one that can shed light into changes in other parts of the system. So those would be the main ones. And the third one is continue inviting us to these kind of forums. We're very happy to engage. And as you know, Roberto, there's a big academic conference also this week taking place in the Caribbean, and the Vice President will be there in person for that meeting. So there's a huge commitment and a high level commitment from the FATF to engage with the academia, and increasingly so.
Thank you so much, Elisa. In fact, yes, tomorrow I think it's a kickstart of the Applied Research on Money Laundering Conference that is hosted by the Central Bank of the Bahamas and sponsored by the IDB. Thank you so much. I see Alejandro has been taking note of your wish list, and I'm sure Georgetown and Transcrime and Sacro Cuore will transform this into reality shortly. I want to thank everyone who dialed in for this first conference in the series. The more than 30 questions we received, I tried to do my best in summarizing most of them, but I'm rest assured that I will share them with Elisa once we're done with the conference. I wish everyone a good afternoon, a good morning, wherever you are around the world. And Elisa, all the best, and you can count on us. Thank you so much.
Thank you, on the contrary. Thank you, Roberto, and thank you, Alejandro, and thank you, gracias to everyone joining us today.
See you next Tuesday.